Why would someone pay $300,000 for a Rolex watch they'll barely wear or a digital JPEG of a cartoon ape? Is it a brilliant financial move or a reckless gamble? This is the intriguing world of alternative investments, where luxury goods, rare, art, and digital assets like Bitcoin and NFTs promise wealth-building opportunities or risks of catastrophic bubbles. Are these luxury investments the key to financial success or just an illusion of value waiting to burst? Let's explore the truth behind this high-stakes market. Luxury items like Rolex watches, Hermes bags, and collectible cars have long been status symbols. But in recent years, they've also been marketed as investments. It's not just about flaunting wealth anymore, it's about convincing others, and sometimes yourself, that these purchases are financially savvy. After all, isn't a limited edition Rolex Daytona just as good as a diversified stock portfolio? The short answer, not really. The luxury goods market thrives on exclusivity and hype. Rolex, for example, intentionally limits supply to create waiting lists that stretch for years. This scarcity transforms the brand's products into coveted items, not just timepieces. Owning a Rolex isn't just about telling time, it's about telling a story. However, while some rare models might appreciate, most luxury items lose their sparkle and resale price when you leave the store. A recent study by Knight Frank showed that luxury watches had an annual growth rate of just 5% over the last decade. Compare that to the S&P 500's average return of 10.5% per year, and you'll see why financial advisors don't recommend building your retirement plan around wristwear. The art market is another arena where the lines between investment and indulgence blur. Works by famous artists like Banksy or Basquiat have sold for millions, driven more by their cultural relevance than their intrinsic value. Remember the infamous duct tape banana that sold for $120,000. It became a symbol of how absurd the art market can be. Art investments, like tulips during the 17th century Dutch tulip mania, are often driven by speculation rather than tangible utility. If market sentiment changes, your six-figure banana might end up as compost. One of the quirks of luxury investments is their reliance on psychology. These markets operate less like the New York Stock Exchange and more like a high-stakes popularity contest. A Hermes Birkin bag is valuable not because it's a bag, but because it's a Birkin. The same principle applies to vintage cars, collectible sneakers, and limited edition Lego sets. The value here is dictated not by utility, but by how much someone else is willing to pay, and whether that someone shows up. Take collectible cards as an example. Pokémon and Magic. The Gathering cards have soared in value with rare editions, selling for hundreds of thousands of dollars. In 2021, a first edition Charizard card sold for over $300,000. Nostalgia, rarity, and a thriving community of fans fuel these prices. But these markets are volatile. If the hype dies down or the supply increases, these cards could return to being just that. Cards. Cars, too, have entered the realm of speculative investments. Japanese sports cars from the 1990s, like the Toyota Supra and Nissan Skyline, have become increasingly sought after. A 1994 Toyota Supra recently sold for over $200,000, fueled by its cultural significance in movies like The Fast and the Furious. However, car investing has hidden costs: maintenance, insurance, and storage. Unlike stocks, cars deteriorate over time, and their value can plummet if trends shift. Now, let's dive into the newest frontier of alternative investments: cryptocurrencies and NFTs. The first and most well-known cryptocurrency, Bitcoin, has seen dramatic highs and lows. Early adopters who bought Bitcoin for a few dollars now find themselves millionaires. But for every success story, there are countless tales of people losing everything in volatile crashes. NFTs, non-fungible tokens, have sparked a digital gold rush, with some selling for millions. A single CryptoPunk NFT sold for $11.7 million in 2021. But skeptics argue that NFTs are the digital equivalent of Beanie Babies, a bubble waiting to burst. What sets cryptocurrencies and NFTs apart from other luxury investments is their liquidity. Unlike art or cars, you can buy and sell Bitcoin or NFTs in seconds, while finding a buyer for tangible assets might take weeks or months. However, this liquidity comes with extreme volatility. Prices can skyrocket one day and crash the next. And unlike tangible assets, digital investments can't be physically possessed, making them vulnerable to scams and technological failures. Alternative investments are not inherently evil. Some have proven to be resilient stores of value. Gold, for example, has been a reliable hedge against inflation for centuries. Real estate remains a cornerstone of wealth building, offering utility and potential for appreciation. But their intrinsic value sets these apart from speculative assets like sneakers or crypto. Gold has industrial uses, and real estate provides shelter and income potential. These factors make them less dependent on market sentiment. The most significant risk with alternative investments lies in their speculative nature. During economic downturns, non-essential assets are often the first to lose value. In the 2008 financial crisis, art prices plummeted by 28% in 1 year. Similarly, luxury goods and collectibles are susceptible to shifts in consumer behavior. When people tighten their belts, they're less likely to splurge on a $10,000 handbag or a rare trading card. So, are luxury goods and alternative investments worth it? The answer depends on your goals and financial situation. These investments can be rewarding if you have disposable income and enjoy the thrill of owning something unique, but they shouldn't replace traditional financial planning. Diversifying your portfolio with stocks, bonds, and real estate offers more stability and long-term growth potential. What's the alternative then? Invest in yourself. Education, skills, and relationships are assets that appreciate over time and provide returns far more significant than any Rolex or NFT could offer. If you love luxury items, buy them for the joy they bring, not for the hope of profit. As Warren Buffett famously said, "Never invest in something you don't understand." This applies doubly to speculative markets. To illustrate the contrast, let's consider two scenarios. Imagine you invest $50,000 in Bitcoin during a bull market. Within months, its value doubles and you sell, pocketing $100,000. Great, right? But what if you had invested that $50,000 in an S&P 500 index fund over 10 years? With an average annual return of 10.5%, that same investment would grow to over $135,000 with significantly less risk and emotional turmoil. In conclusion, the world of alternative investments is as fascinating as risky. From duct-taped bananas to digital apes, these assets capture our imagination and sometimes our bank accounts. But the key to successful investing lies in balance. Understand the risks, enjoy the rewards, and never lose sight of the ultimate goal: building a stable and secure financial future. Let us know if this deep dive into alternative investments got you thinking. Share your most unusual investment story in the comments. Don't forget to like, share, and subscribe for more insights on innovative investing strategies and the ever-evolving world of wealth building.